Good morning, everyone, and welcome to the morning pre-market homework session and trade plan setup for Thursday, February the 20th, 2014. For those that are visiting us, we are Quantum Leap. We are a self-organized learning environment, or what we call a SOL. We have a private Skype room that has been running for about 4.5 years now. It's a private room. It's not a commercial venture. If you're interested in coming in and checking it out, you'll need a Skype account, and you can send me a request to Doug_McKay at I'll be the one from Windsor, Ontario. And you can come in and take a look at the room, check it out. Each morning we come here to look at the market. We start with a macro to a micro mindset where we look at the key numbers, and we look at the trends on the different time frames, and then we drill down to more in-depth chart analysis based on my methodologies, which is mainly volume profile, and then Howard will come in and talk about fibs and internals and all that good stuff. But let's get going. We got lots to talk about, and I've been going long every morning lately. Just when you got a lot to say, it's hard to keep it in a short period of time. So if you're watching this video after the fact, you might want to skip ahead a bit until we get into some more of the in-depth. We go through a routine because we're preparing for our trade day, and we don't skip routines. There are no shortcuts in trading. So let's get going. Legals. This information is for the purpose of educating members who want to expand their knowledge in business. Trading is not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves risk loss. Please consider carefully whether futures or options are appropriate to a financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than initial investment. Nobody from Quantum Leap is a certified trading advisor. We are retail traders operating within the self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own plan, do your own due diligence. I'm getting tired of saying that every day. Anyway, we're just going to start saying, hey, trading's risky. Be careful. So here we are. We had this Friday COT report. I'm going to just change things up here just a bit, and we're going to go right to just take a look at the COT report. So COT report, you've got your large specs, your small specs, and your commercials. And this line right here, the left scale, is your zero line. Everything above is net positive. Everything below is net negative. And one of the things that we watch here in Quantum Leap is when the commercials and the large spec get net short and the small spec gets net long, and they're left as bag holders. And you can see as we are moving up, the commercial was, the first ones to, the small spec were the first ones to get net short, and then the commercials, soon followed. But now they're both net short, and the small specs are left still long. I'm anticipating, or was anticipating, there's some doubts that are coming in, but I'm not completely convinced yet. I was thinking that we were going to get a blow-off top in this situation, go in and equalize that high between the year high at 1845.75 and the all-time high at 1846.50, put in another blow-off top, and then a big sell-off from there. We got to 1844.50 again, which is a lower swing high, and now we see ourselves, trading, 22 points below that. Sell-off in the late afternoon yesterday, and then another sell-off in the Globex really brought us down. And we've got two main events that are showing up. We had in January we had the Chinese PMI that caused a bit of a sell-off, and then yesterday we had the Japanese PMI, and both of those reports came out lower than expected, and we saw a sell-off in result of that. So we've got to be wary. But the one thing you've got to think about is that we did have 10 days of straight vertical movement to the upside, and throughout history we've shown that a sustained rally like that has to have a pullback. And I've been watching this 1818 level, if you've been doing homework, as a very important line in the sand, and we've come down and tested it. We actually broke below it last night and dipped down to the overnight low at 1817.25. So, we are seeing some weakness, but just be careful. There's still risk to the upside, but we've got to be cautious in both directions now because we are seeing that weakness come in. So let's take a look at the key numbers. Of course, we've got the 1837.75. We now have another key number here, which is this 1844.50, which is another swing high now. It was a higher high, so we continued the trend to the upside yesterday, but we had the big sell-off. So we're below the year open. We did not make. We came, within about a point of the year high at 1845.75, and we didn't get through to that 1846.50. And remember that 1846 is still a naked close as well, so there's a gap up there. But we're seeing some weakness coming in. We had a higher Globex open, but then everything sold off yesterday into the RTH at 1832.25. They pushed it up. Our initial balance high, our swing high open 1834.50. Swing low 1831. And the other day I was mentioning that one of the things that we watch in Quantum Leap is we watch the opening swing, the market on open orders, to give us an indication of the type of day that is setting up, and actually the open type as well. And an open test drive can lead to a vertical development day, but it can also lead to a rotational day. But the opening swing, the market on open orders, when you get over 2 points, you've got a wide variance of perception on those orders that are executed on the open, and generally that will lead, and it's one of the clues that we look for a rotational day. The other thing we look for is the size of the initial balance, and a normal initial balance is between 6 and 9 points, and when you get an initial balance that is wider than normal, a lot of the times that's another clue that you'll see a rotational day. So we went up within the first hour and put in the RTH high and the IB high at 1845.50, and then we had the initial balance low was the move down on the open test drive to test that 1831. And then you can see all our RTH numbers were lower except for that high again. And it's now a swing high with us being 20 points below it, and we'll see how that affects if we get the fact that we've got a couple lower lows off that 46.50. That's a good indication that we're seeing lower. Nothing else really jumps out in terms of the intraday numbers, except the fact that most of them were lower, and we've had a VPOC shift. They stole the VPOC into the close at 1825.50. Believe it or not, that was not a bad sign for the fact that we could just be holding up. What was the killer last night was that sell-off in around 8 p.m. Central Time to take us down another 10 points from there. I thought with the fact that they stole the VPOC into the close, and I'll show it on the chart, that's usually buyers stepping in to hold the market and find value lower and halt the move down. But then we moved up to 29 and a quarter in the first part of the Globex, and then we had that big 10, 12 point sell-off that happened all over about 4 minutes. Value area, first time we've had value area lower in about 10 days. Both the high and the low of the value area, 1838 on the high, 1823.50 on the low, and 23.50 was actually 23 and a quarter, was an area we were looking to do business with a possible push through to that CHVN at 22.50. Broke the IB again. You can see that we're breaking these IBs late in the day because we're battling up here between having a positive year and a negative year with that 1837.75 so close. ETH session was all lower, and then you can see we had a little bit larger than normal volume, but that volume really came in late in the day. Let's go over to the daily report. We had news. We got a bit of news going on today. We had the unemployment claims. I didn't see what they were, but it gave us a little bit of a push up. The big one coming up next is obviously going to be the Philly Fed manufacturing at 9 Central. So be careful in that first half hour. And then, we're supposed to, possibly get back to the testifying from Yellen. It got canceled with the snow, and they've been rescheduling it, so we'll have to keep an eye on that. And then we've got natural gas at 9:30 and crude at 10. ATR targets so far today, the 20-day ATR target based on the overnight high and overnight low, which constitutes all we have so far in the full session, is to the upside 1842 and to the low side 1804.50, and both of these are key levels, and we'll take a look at them. Let's move over to taking a look at the trend. Of course, the trend on the monthly is still very much intact. Good slope, good separation. So trend is intact on the monthly. On the weekly, same thing. We had some weakness. They popped back up. We've got the slope. We don't have a lot of separation, but the trend is still intact and would not be violated until we get back below that 1792, 1793. The number I'm really watching is that 1794.50 if you've been into homework and following along. Going to the daily, well, we had this big move up. You got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And we talked about that yesterday and the day before, that we had this technical gap that hadn't been filled and needed to come down and get filled. And you can see we came down and filled the gap, but we did not break below it and close below it. We still have that naked cross where 1794.50. Again, that number is going to come up a few more times in what we're looking at this morning. But we held the 9 EMA and we closed the gap, so it can just as easily rally from here and continue this this move up. We have not violated this upward trend. We simply came back on a natural retrace after 10 days of nonstop up moves. Let's go over to the geometric chart. Yesterday we were looking at the fact there's 3 forks on this chart. There's the upward sloping long-term fork that we've been watching for many months now. Then we put this opposing fork in when we put the high in at 1846.50. And last week I added this new fork here. And we've been watching the fact that we had broken back inside of the long-term fork in this lower channel that we've been trending up on. And we were coming up and we were looking for a test to the upper line of the opposing downward fork, and then once we broke out of that, we were looking at coming up and testing the upper line of the intermediate fork that I added last week, and we were failing off of it. We talked yesterday morning about coming down and testing the upper line of the downward sloping fork and closing that tech gap. We did that. We do have this energy point that seems to be coming into play, but it's not due until the 25th. Down here at 1816.50, we can easily just chop around here and come down. A couple lines you want to keep your eye on right now is this 1819. For me, it's going to be the 1818.50, and then below that, the test of the lower line of the upward sloping long-term fork is the 1812 area. And for me, it's actually not 1812, it's 1814 that I'm looking at. So, I mean, not a lot we can get off of this. If we come back up to test the upper line of the new intermediate fork, you're looking at 1840 And that's our ATR target, our full session ATR target for the day is right there as well at 1842. So let's just take a quick look at where we are in the trends in the intraday coming into the session. 4 hour, we had a technical gap, closed it. We're trading inside the 9 and inside the 20, and really no trend in place here. We're consolidating sideways right now. Going over to the 30-minute. 30-minute, we had a nice move off of the news at 8:30, half hour ago, and we're creating a bit of a technical gap, possibly a technical gap with the Mr. Sneaky in it. So just keep an eye on this 30-minute, and we could see, a move down to close that gap, and led by the Mr. Sneaky here. Going to the 50 or the 5-minute. Just want to get through this quickly. This is even more apparent here. This could be, with the volume coming in, this could be a tech gap blue bar Mr. Sneaky setup, and could signal a reversal coming in. But we'll see how much of a retracement that we get off of this pattern. So watch that over the course of the next 20 minutes or so to give us a clue coming into the session. Let's go over to the composite chart. So, we come back into this balance area. It looks like they were accepting value. We had a 2-day, 3-day microcomposite VPOC up at that 38.50, which was right where they were trying to hold value after going up and making the year high at 45.75. And then yesterday we tried to push. It looked like they were going to go and put in that new high, and then we got slapped down by the sellers, and they pushed it all the way back down, and we came all the way down and tested our our area and our target below down here at 18.23 1/4, and then buyers stepped in, and we had a VPOC shift late in the day at 25.50, and since then, we've tried to break through in the Globex below this 18.50, but now we've moved back up and we're trading at 18.27.50. So the sky is not falling yet. We're back inside of value. The value area low on this microcomposite ranges from December the 23rd to January the 23rd. The value area low is 18.24.75, and as long as we're back in value and accepting value, you've got to be thinking that we can drift back up towards this 18.32 1/4, which is the microcomposite VPOC from the larger distribution zone and balance zone up here. The value area high, 18.40 1/4. So if you look on this in terms of the composite, we're trading. We're just moved up a little bit more now, so we're trying to get above this 18.28.25. If we can hold above 18.28.25, I'd be looking for a rotation up to test the value area low of the 4-day microcomposite, which is right here at 18.29.75. Get back inside of this value, accept the most current value, and drift up, in towards this 18.32.25 with a possible move up to test that 34, which was another key line for us when we were trading above it. If we get above 34, we've got the 4-day microcomposite VPOC here at 18.35 1/4, and you've got basically 3 main distribution zones. And I'm going to actually even add a 4th right here, which centers around the 36.50 CHVN, the 32 1/4 CHVN and microcomposite VPOC, the CHVN at 25.50, and now we've got to keep our eye on this 22 1/4 again, and that was one of our secondary targets to the downside yesterday. But the key line in the sand will remain the same, 18.50. Below 18.50, you got to start thinking that this 44.50 is going to be a lower swing high. We haven't put the fractal in yet because we need another 2 candles to put the fractal in, but you got a fractal high here, 18.46.50. another fractal high 1845.75, another fractal high 1845, and then this will be, and I consider, you know, any fractal highs within 2 ticks or so basically a bit of a double top. Got a bit of a weak bottom here on the micro composite, so we have to be worried about some weakness that we're seeing in the marketplace. But again, the sky is not falling. We're back into value, and you've got to still, you know, I'm really going to be looking long above 28.25, below 28.25. Then I'm looking for just, you know, basically chop and possibly coming down and testing this 1850 again from the upside, and maybe coming down and testing the overnight low at 17.25 with a rotation down to this 1845.75. And we've got the 1812 CLVN, but the big one is still this 1806. And the reason this 1806 comes so much into play is it's the 1806.75 is the range high from the balance area that we broke out of, you know, to go make up those year highs and all-time highs. Then when we broke back down below it, we came back into this distribution zone, accepted value again in around that 1780 area, and then we launched back up and you know, went into this upper balance area. So if we get below 1806, you know, three main targets I'm looking at. You've got the, you know, well, you got 1802.50, but we didn't find buyers there the last time, so I think we've exhausted buyers with conviction there. So it's 1798.25, 91.75, because that's the last most accepted price before they broke back out of this balance a second time, and then the big number below is down here again at that 1781.50, and I think if we get below 1800, we're going to come back down into this distribution zone, and I think that the bulls will be somewhat capitulated at that point in time. But again, if we hold, if we get above this 1828, look for the move up to 1832 with a push through to 34. And then if we get through 34, then I think we're back in the game again. We're back into this value area for the last 4 days between 29.75 and 39.25. And all we got to do is get back above that 1840.50 CLVN, which seems to be a real stumbling block for us, and we could go see a new high. So let's go and move our numbers over on the Globex to the, and we've got a new high, so I'll have to adjust that ATR low. But our overnight high so far, which could extend because we are trading around it, 29.50. Which is just below the value area low for the 4-day microcomposite. And then we've got the value area or the overnight low at 1817.25 area. So we'll just put that in. And then our VPOC for overnight is sitting at, shifted up to 2250. All right, so let's get rid of this and take a look at what we've got here. So we've got a triple distribution day. It's a little bit sloppy, but you've got distribution in the middle, the distribution, and the VPOC shift where they stole the VPOC just before the close as the buyers came in to defend. You've got an LVN right here at 29.50, which is just above this 28.25. So 29.50 area is going to be an area that I'd be looking to do business. It's also going to be a target because we're opening up closer to the overnight high than we are the overnight low, and we've got a 96% probability of taking one of them out. So the likelihood is they'll try to push up and get back into that value area of the 4-day microcomposite and get into the middle distribution from yesterday and drift up towards that, you know, that 32.25 microcomposite VPOC. So 32.25 is going to be my first target. Above there with a trade area just above, worrying about that 34 CLVN again, and then once we're above 34, then I'm looking for a stronger move up towards the first target, which will be 36.50. Which is at CHVN with a possible move to the value area high yesterday at 38 and a quarter. And that will be another trade area for me where I'll be looking for responsive sellers to step in there. And then above that, just above it, you've got this 1840. And this 1840 is the other side of balance, and the CLVN at 1840 75 or 1840.50. This is going to be a trade area, but it's really a target. And if they can get outside of value, it's going to be a big clue. And if we get to this 40 area, whether we can break it or not. And then just above that, the extended target and the ATR target, the 20-day ATR target is that 42 area, 1842. And then above there, you've got the new swing high and the range high, which will be 44.50, and I'll be looking for a breakout or defense of the range for yesterday. And then the extended targets, and I'll put the extended target label on it, is the 45.75, 46 and a quarter, 46 and 50. Those three key areas. So we'll just put it right here at 45.75, if I can. All right, then below 29, you got to be looking for the gap close. Our close yesterday was 25 and a quarter, and a takeout of the naked VPOC with the test of the value area low at 23.50, and that 23.50 is that CLVN that we were watching yesterday. So that's going to be an area for me to do business and look for the breakout of value from yesterday and a break below that 23 and a quarter, and the initial target below that will be the overnight VPOC and the CHVN at 22 and a quarter. And then the big number below, of course, is this 18, 18, 15. And if we get below that, I'd look for them to go down and take out the overnight low at 18, 17 and a quarter. And then the extended target, or not the secondary target to the low side, is this 18, 14, 75. And then just below that, we have 12, which is the CLVN, be another area for possible trade setup. Come on. And then below that, we have 1809. But I think if we get below that, I'm really watching this 1806. And this 1806 is going to be extremely important area for us to hold. We do have some naked closes below us. Whoops. We have those 1800, 50, 1800 and a quarter down here with that first target below 1800 at 1798. I just don't think we're going to get down there today. I think you're going to actually just chop around here and test both sides. This area of the composite is rather convoluted right now, so it'd be hard to tell until the RTH open whether or not they're going to break back above that 28 and make the move into the middle distribution, or whether or not we're going to just chop around in the weak list in the lower distribution and show some weakness with a move down to test that 1850. Taking a look at the Keltner, upper Keltner 29, just below that value area low from the 4-day microcomposite. Keltner center line 23, 75, so it's right there at that 23.25 key CLVN, and then a move down to test the lower Keltner line, 18.1825, right there at that line in the sand, and the CLVN at 18.1850. Take a quick look at gold. Again, I want to go back to the gold chart. Oh, you can, wait a minute, let's just, I was talking about this, tech gap foobar, Mr. Sneaky. So you got the tech gap, you've got the volume coming in. I haven't checked on the other chart to make sure it's an actual foobar, but it looks pretty close. And then you've got the Mr. Sneaky, and we're moving down to close this technical gap. Let's go take a look at the gold daily, because we've been talking about this. All right, so this is a long-term bottoming pattern that we've been watching for a couple months, waiting for it to come up and break the upper trend line. It did that, last week, and then we fought, to try to hold above it. I said once we hold above it and we close above it, we should get a bigger move up. And then I identified, this pattern, which is a developing cup and handle, and it's right at the 60. The right rim is right at the 61.8 retracement off of the swing high at 1434. We haven't come down to all the way yet, but if we come down, we need to come down to this 1276, which is the 38.2 retracement on the cup. To validate the handle. If we break above the rim, the first target is that 1434, and the measured move is up at 1484.70. So this pattern still remains a possibility. It would be natural for it to come back down and test these lower levels. You just don't want to see it break back inside this trend line. If it holds above that, these descending, broadening wedges are big-time reversal patterns. So we should see a bigger move in gold to the upside. I just want to take a look at it quickly, Howard. I'm running late as usual. I just want to take a look at the composite on gold. Bring today's volume in so far. Doesn't change the microcomposite VPOC is still there at 1320. I'm anticipating, just more drift in this area with a possible move to test that, come down and test that 1300. And again, if we get below 1300, then that's a trade that you might want to take, with the formation of the handle and ride it down to that 1276. Possibly the lower validation of the handle is all the way down here at this 1240, 1242 area, which happens to be the microcomposite for the longer term down here as well. But I mean, today we just have to look at the range. Really, I think that we're going to drift around in this with a lower, bias, possibly come down to 1304, or maybe even this 1309 area again. Test the the range low of this microcomposite, but just basically chopping around. If they get, if we have a big rally and we get above 1337.25, then I'd be looking for a bigger move up towards this 1351.60, and would basically invalidate the cup and handle. It wouldn't invalidate the cup and handle. It would just give us a higher rim. We can come all the way up to 6190 to form this cup, and then we'll just redraw where the potential retraces are for the handle. Anyway, that's what I'm looking at. I'm not really looking for much to happen in gold today. That's going to complete my analysis. Howard, do you have anything you need to share with us this morning?
I'll just do a couple of quick things.
Okay.
So we'll look at some market breadth indicators. Bottom graph here is showing on-balance volume, which is actually forming a higher high. So there's a little bit of a non-confirmation where the on-balance volume is stronger than price has been. Price basically formed a double top. On-balance volume has formed a new high. So next thing to look at is this is the Dow Transports in the pink and Dow Industrials in the cyan, and we just moved below, the transports just moved below the industrials, so that's kind of a key thing because I never really went below it at all last year, and we started a little bit below early in the year, but it since has been stronger since then, but now we've started moving below. So we haven't seen that in quite some time. So next we'll take a look at advanced decline and up-down volume. Okay, so with yesterday, actually since the 14th, last Friday, both of these indicators are starting to move lower. So it'll be key to see if this high remains intact and then the market starts showing more weakness going forward. Our actual high was put in back here on these two indicators back in last October. We haven't moved higher than that since then, while price did. So we've been in a non-confirmation since that time. We did come and form a double top consistent with price since back here at the end of December. Now we're starting to move lower. We're looking to get close to challenging the midpoint 50% level on these two indicators. And then take a quick look at the sectors. It looks like for the most part the sectors are moving lower. One exception looks to be the energy. Energy's been moving higher against the grain, and so has the retail sector, which has been in the seller for most of the time. So with those two exceptions, all the other sectors started showing a little more weakness. And one last thing on the daily chart, this is yesterday's candle. What normally is a significant indication is that we had a key reversal day. We had a higher high, a lower low, and a close below the prior day's close, or prior day's low. So we have a daily key reversal candle. But, that's only the first red candle in the last 11 days. So we'll have to see if we get follow-up and continuation, but overnight we did challenge this 9 moving average and reject it. So we'll see if the 9 moving average shows continued support at that level. So we ran a little long. There's about 4 minutes to the open, so I'll turn it back over to you, Doug.
Thanks, Howard. That's going to complete our morning homework session. We're going to be opening up in this lower distribution. Be patient. Wait for them to either test this 2950 and have responsive sellers step in to keep us in this lower distribution and a rotation back down towards that 1850, or wait to see if we find responsive buyers stepping in here at the range low and that CLVN. But if we break below this 23 and a quarter, I'd be looking to get short into this 1850 with a possible push through to 18 and a quarter and that target down at 1814.75. As always, trade well, trade safe, and we'll catch you on the flip side.